Hi everyone, this is one of the members of FS Goats. So on this lesson guys, I'm going to help you with tips on how to trade NASDAQ, right? So I don't want to waste any further time, so let's just continue. So guys, as we're getting started, I'm going to give you guys expert tips on how to trade NASDAQ. As you all know, NASDAQ is a very volatile trading index, right? It's one of the indexes that we trade. So you want to make sure that whenever you're trading, we recommend that you limit your exposure to less than 5% on all open trades. So this is done to ensure that you don't put a lot of risk when you trade NASDAQ, because NASDAQ is already a volatile pair. So what that means is when you trade NASDAQ, be sure to stick to small lot sizes. The more you're going to increase your lot size, it's more you're going to increase your risk. So as we continue with the lessons, we're going to show you the importance of basically managing your risk. That will help you ensure that you trade NASDAQ in the best possible way. Before we enter trades, guys, we recommend that you decide on a risk-reward ratio that is always positive. That will ensure that you always have a positive statistical advantage. So let me show you what I mean by that. So guys, as you know, that whenever we trade NASDAQ, we have to ensure that we use a risk ratio of 1:2. So why do we want to use this kind of ratio? This ratio means that whenever I take a trade, I am willing to lose 1 to gain an overall of 2. By so doing, it ensures that all my trades will end in a positive manner. So if I'm willing to gain 2 and lose 1, this will ensure that my account grows regardless of how many trades I take. That's why it's important for you guys to make sure the risk ratio that you're going to take on each trade is always positive. That will ensure an overall account growth. So as we continue, guys, before you enter trades, you have to make sure that you never enter when there is major economic data release. You must make sure you always avoid such things. What I mean by that is we don't always lead the market. We must make sure that we react, but we don't lead. We want to see what the major economic data does, and then we react afterwards. We never lead, but we follow. So major economic data can cause massive spikes in volatility. It is better to wait for the market to settle down before you trade again. So in order for you to improve, you need to make sure that you're going to record all your trades so that you can preview the trades afterwards. And by so doing, this can help you pinpoint and work on your weak points. Like we always say, you have to make sure that you're going to go back and see your problems, because what you can't review, you can't improve. So we have to make sure that you do not trade when you're emotional, tired, or bored. You only trade when you have done your research and analysis and you are also confident in that trade. So now, in terms of you trading, you have to make sure that you're going to select a trading time frame that's going to suit your goal. So in terms of time frame, guys, we recommend trading with a structure called reverse pyramid. Let me show you what I mean by that. We have a nice reverse pyramid here, as you can see, guys. So the reason we're saying you have to trade with this kind of approach is to make sure that you know the overall direction before you enter each trade. So we're going to be starting from higher time frames and we're going to move into smaller time frames to pinpoint our entry points. So let me put that in writing. Yeah, so we're going to be using higher time frames, like example weekly, monthly. So we're going to use higher time frames because they're going to help us understand the overall direction. And when we use smaller time frames, we want to make sure that we use them to help us understand our entry triggers. So by entry triggers, guys, what I mean is whenever you trade, you don't enter a trade unless you have a confirmation. All our trades will come from confirmations. So you're going to see from the next lesson, we're going to have technical analysis. That's where we're going to go in depth in terms of how you're going to find your entries, how to find your support, how to find your resistance, how to find where to enter and where to exit. In order to do so in a more progressive manner, you have to make sure you're going to use a reverse pyramid. So now, guys, we're going to cover technical analysis. Like I've discussed before, technical analysis will be discussed in depth in the next lesson. So we all know that NASDAQ is one of the world's most popular and widely followed indexes. There is no shortage of technical and fundamental analysis, meaning that whenever you're going to trade NASDAQ indices or any index, you have to make sure that technical and fundamental analysis still applies. So the clear technical chart patterns that we have, they're going to help us provide a distinct entry and exit signals. So how to trade NASDAQ 100 using technical analysis. Traders use technical analysis to analyze charts, looking for buys and sell signals. Technical analysts can use indicators to help them identify current trends in the market, shifts in sentiments, or potential retracements. As you can see, we're going to use technical analysis to help us better time our entries. So we all know that NASDAQ is a powerful trading instrument that you need in order for you to trade in the moment. So you must always be aware of the structure to be able to place accurate entries. Even though an instrument is volatile, you can exercise patience when trading. So that's why you're going to be using technical analysis. As long as you're going to enter a field where there is risk, you have to make sure that you follow all your rules. So now guys, we're going to cover fundamental analysis. As we all know, we're going to be approaching NASDAQ from a fundamental point of view most often because we know that companies affect NASDAQ more commonly. So how to trade NASDAQ using fundamental analysis? When trading NASDAQ, a range of underlying fundamental variables affect the price of the index. So traders must be aware of these variables and this possible impact on the index. These variables can range from microeconomic events to fundamental composition of the index. So here are some of the main movers of the NASDAQ 100 indexes. Number one, we're going to be using the largest companies in the 100. So NASDAQ is a market capitalization weighted index. So the largest companies tend to move it the most, like Apple, Microsoft, Amazon, as you're going to see as we cover the lessons. So some indices are weighted differently and this can affect their prices. So it is important for you to understand the difference between these indices, right? Number two, we're going to focus in changes in the Federal Reserve's stance on the monetary policy that can have adverse effects on all stock markets. So this includes trading NASDAQ 100 index. So the third one will be economic data like inventory, employment, CPI, interest rates, GDP. This data can signal what actions the central bank will take on monetary policy. And last but not least, we're going to use trade wars and currency wars because they mostly can impact large companies in the NASDAQ by way of tariffs and trade barriers. So as you see guys, the more we're going to cover the lessons, you're going to see how we approach NASDAQ because our approach is more of making sure that we do not lead the market, but we follow, and that's how you can be profitable when you trade NASDAQ.